Welcome back. Redington is the company on our radar right now. The stock is holding up in the green with a gain of about 1.5% after the company posted their highest ever quarterly revenues. Revenues for the company have gone up by 13.7% on a year-on-year basis, 7-quarter high. Margins too have inched up to 2.3%, higher than the 1.8% in the prior quarter. We have with us V.S. Hariharan, Group CEO of the company. Mr. Hariharan, thank you very much for joining in. This is Reema here. You were optimistic about Q3 given the festive season. There were backlog of orders in India and, the EMEA area. Now looking ahead for Q4 and FY26, what is the outlook? Does Q4 look better than Q3? And FY26, what can you guide?
Thanks, Reema. Thanks for having me here. So obviously we have shared the best quarter ever in the history of Redington with the 26,664 crores of revenue this quarter and a profit of 400 crores, which is also the best. It was largely, as you rightly said, given the season as well as the sale of technology solutions, the value business this quarter. We had some good large deals both in India and UAE, as well as a good demand in the technology and the cloud solutions area. Going forward in Q4 as well, we do see a fairly bullish outlook. Because it's a year end for India and the budgets that the corporates and the government have, we do see that going forward. We do have a festive season, the Ramadan season in the Middle East and Turkey, which might have some softness that happens in March. But outside of that, across all the business units, from mobility, consumer PCs to technology solutions and the cloud business, we do see a fairly optimistic outlook for Q4 as well.
Okay, so given that you're bullish about Q4, do you think you can push to a double-digit at 10% kind of revenue growth to close FY25? In the first 9 months, you're at 8.9%, and you are doing double-digit in, So do you think we can get to 10-11% full-year growth numbers?
I think typically Q3 and Q4, we do get double-digit growth. That's the outlook. But again, market conditions will determine what happens and how we execute as well. Those are the two things. I think the market is available for a double-digit growth in Q4. And it's all about if anything changes in the closure of the bigger deals in Q4 and we are able to execute well.
Hi, Mr. Hariharan. Good morning. This is Vinnii joining in the conversation as well.
Hi,
so double-digit growth is what we're expecting in Q4. But in terms of margins, what could we expect? Because margins also are at a 7-quarter high this time. Is that something as a trend that we could see continuing this 2.3% kind of margins?
I think from an EBIT perspective, we are looking, our outlook is around 2.3% plus minus. Again, the mix of the business will actually drive that. Typically, on the mobility side and the PC side, we get a bit lower margins, and the value business gives us higher margins. So the mix will largely determine how that will look like. But again, our outlook going forward is to try and keep the margins plus minus around the 2.3%.
You said EBIT margins at 2.3 or EBITDA margins at 2.3%?
EBITDA margins at 2.3.
EBITDA margins, and you should sustain that level?
Yeah, we want to be able to sustain that level. That's what we're shooting for.
Okay. Yeah. And what explains the sequential jump in your margins from 1.8 to 2.3%?
So if you see the way our quarters pan out, Q1 is normally a soft quarter for us coming out of the year, and Q2 has all the mobility NPIs, and it is weighted highly towards mobility where we get lower margins. Q3 typically has a lot more of the value businesses, servers, the storage, the software, etc. And Q4 also, the mix is tilted a little bit around the value business. That's what drives the margin a little bit. So again, you'll see that cyclical thing. But overall, we've made a lot of changes in the way we do our business, and on our OPEX as well. We made a lot of improvements. We have really cut back on things and right-sized some of our investments. So we are trying to gun for a better gross margin, with the mix being favorable towards value business and the OPEX being in the right direction. So all those things drive better EBITDA.
What's the current mix between your value segment, which you call as software, servers, storage, on which you get higher revenue? So what does it currently contribute, and what's the ideal mix?
Yeah, so currently, if you look at this quarter, about 30% of the business comes from the technology solutions group and about 4-5% from the cloud. So between the two of them, we have about 34-35% of the mix, and about 35% comes from the mobility solutions group. If it remains at around 35%, obviously the margin gets tilted towards a higher margin level, and we'll retain our OpEx and spend in a similar way. We will obviously be investing more in the value business as we go forward because we see a lot of upside and growth there. We'll be investing in cloud and AI, and some of that will bump up our OpEx, but the 35% ratio of value business will be important for us to maintain the mix in the higher margin.
Right. Mr. Hariharan, what I want to know is you did highlight that, India, UAE surely did well for the company in Q3, but in Q4, you highlighted some of these points coming out, Ramadan being there in the Middle East, which could impact the overall growth, right? So right now, when I'm looking at the CISA growth, that has been around 5.5% on a quarter-on-quarter basis, 17% is year-on-year basis growth. What is the growth that we could expect specifically from CISA and rest of the world also? What is the outlook in terms of growth there?
I think the CISA growth will be similar. We don't see anything that really is pointing to the direction of that reducing, so it'll be in similar levels. In Middle East, Africa, UAE has grown very well for the last 2-3 quarters, but Saudi Arabia has been somewhat subdued because the government reprioritized investments. I think the next quarter, the next few quarters, we see Saudi coming back, so that should pick it up a little bit. Similar in Turkey, there's a decline in market size in Turkey over the last few quarters because of inflation and interest rates. That has now flattened out. So we don't expect a strong growth coming back in Turkey, but at least if it is flattish, that'll help. But the Saudi Arabia growth and the continued momentum in Africa overseas will be important for us to get better growth in the rest of the world.
Mr. Hariharan, great chatting with you. Thank you very much for joining in, and do come more often on CNBC-TV18 to share updates. Thank you.
My pleasure. Thank you.
That's Redington for you. It's had a good quarter, and the stock has spiked a tad bit. The company's bullish about Q4. There is no reason why double-digit revenue growth should not persist in Q4 unless some big macro headwind comes through. And margins too, they're trying to maintain it at current levels of 2.3%. because they want to keep the mix of high-value segments like your cloud, technology. As long as that remains high at 35% in terms of a contribution to sales, margin should stay at these levels of 2.3%. We'll get into a break. We'll come back. It's a big, big day in terms of earnings. So we'll put the spotlight on names like State Bank of India and ITC as they get set to report their numbers.